Hey, Business 163, personal finance. We are now looking at the next form of insurance that most of us are going to have to run into. And as you know from the title slide, we are looking in this video at the topic of automobile insurance. That's right, auto insurance. And quite frankly, most of us are probably familiar with auto insurance. It's the other big purchase most people make, right? For many folks after a home, the automobile is one of the largest purchases you'll ever make. And for many of us, right, we're going to buy it. We're going to have some sort of an auto loan on it unless you pay full cash for it. Hey, especially here in the state of California, most states, right, some measure of automobile insurance is an absolute legal requirement. You are not allowed to legally drive a motor vehicle in the state of California without some form of auto insurance. Now, some types of coverage are absolutely mandatory, but some are optional and quite frankly might be a good idea. So you have several different types of possible coverages. Not all are required. Let's talk about that. Here in the United States, automobile insurance typically has 5 different types of insurance coverage. There is liability insurance coverage, which if you are involved in a collision, pays for damage to the other guy's car. Right? That's what liability means. Collision is the coverage that pays for damage to your car. All right? Comprehensive is optional coverage that you don't necessarily have to cover in a car, and that pays for anything else besides coverage, collision and liability coverage. Personal injury is additional coverage that covers the medical expenses of others you injure. And finally, there is uninsured or underinsured motorist coverage, which is optional in the state of California. And if you are involved in an accident with someone who does not have the adequate level or any auto insurance, that will kick in to help cover the costs of the damage that was incurred. Now, as you can see here, some of this is required, and of course required depending on the state you're in, right? Primarily, we will focus on the state of California, but just want to let you know it varies from state to state. And some of these types of coverages are optional. But let's go through them one at a time. What is liability coverage? Liability coverage pays to repair the damage you cause to other people and their things, like their car. And there are 2 general types of liability insurance: bodily injury liability and property damage liability. And you can tell from the names what we're talking about. Bodily injury is if you hurt other people, and that kind of coverage pays for their medical expenses, their recovery treatments, and their lost wages. The second type is property damage liability, and that's if you cause damage to vehicles or other property if you are at fault for a collision. And quite frankly, most states require that you have both bodily injury coverage and property damage coverage as part of your liability coverage. Liability coverage does not have a deductible. In other words, if you run into somebody else's car and you're at fault, they don't have to pay a deductible or anything like that. Your insurance company will pay them directly with no deductible applied. And in the state of California, the Department of Motor Vehicles requires that every insured motorist have coverage for at least $15,000 for injury or death to one person, $30,000 coverage for injury or death to more than one person, and at least $5,000 for damage to property. Okay, so those are the minimum limits that you absolutely must require to have a valid policy in the state of California. The second type of coverage is collision coverage, and this is concerned not with other people and their stuff, but with your car. This pays for damage sustained to your automobile if the collision is due to your fault. It does not cover damage due to theft or vandalism. That's covered under the next type we'll look at in just a slide from now. It also does not cover damage that was paid from another driver's policy if the other driver was at fault. So remember, right, if you're at fault, then the other guy's car is covered by your liability coverage. And quite frankly, if your car is hit by somebody and it's their fault, their liability covers for the repairs to your car. So you can sort of see how that works, right? Now, collision coverage is not required by law by the state of California's Department of Motor Vehicles, but it is required if your car has a loan on it. Every automobile lender will require you to carry collision coverage for the life of their loan. Now, this is subject to a deductible. You do have to pay something before your insurance kicks in if you damage your own car. It also is subject to limits. The limit, of course, as you may remember from our vocabulary slide, that's the maximum that the insurance will pay for a covered claim. All right? So you may want to take a good hard look at this to distinguish and understand how collision is different than liability coverage. There is also the third type of coverage, comprehensive coverage. And this is optional, legally speaking, but most lenders will usually require you to carry comprehensive auto insurance. This pays for damage for something other than a collision. For instance, hail, if you live in the Midwest where they have hailstorms, extreme weather, animal damage, falling objects, theft, and vandalism. This is, if your car is broken in, this is what covers you, not collision coverage, comprehensive coverage. Now, just note, comprehensive coverage will cover many things, but it does not cover medical bills, crashes, your personal property that's in the car that might be stolen, although your homeowner's insurance, we just talked about in the last video, that will probably cover it. And I have an example of using comprehensive coverage, and that is I used to have a sedan. I was driving to teach at another university, and a deer slammed into my car, the driver's side passenger door behind me. It felt like a grenade had gone off in my car. And it was a deer that had just run full bore into the car. Deers are really big animals, and it basically just tore right through the glass and that door behind me. It was horrible. And so it's not my fault. That's not collision coverage. It's comprehensive coverage that covered that claim to my automobile. That's just an example, right? So when we talk about animal damage, that's the kind of thing we're talking about covered by comprehensive. Returning to the slide deck, the next type of coverage is known as personal injury protection coverage, sometimes known as PIP insurance. Here in the state of California, we don't have PIP. We have something else called MedPay. But in other states, we have personal injury protection, and typically full PIP insurance pays for medical bills and lost wages when you or your passengers are injured in a car accident. Here in California, we don't have that because we are an at-fault state. That's an insurance technicality. We won't spend a lot of time explaining that, but just realize in California, instead of PIP insurance, we have MedPay. MedPay will cover certain types of medical bills, but does not cover lost wages. It's also fairly expensive here in the state of California, but that's another optional coverage. And then finally, there is uninsured or underinsured coverage that is available here in the state of California. Why? Because over 15% of drivers don't carry the legally required amount of insurance or have any insurance. Right? So I was recently involved in a hit and run. I was hit by a car. The guy just drove off. I'm presuming because either he didn't have insurance or he wasn't, in other ways, a legal driver. But you'll see here on the slide, in California, uninsured or underinsured coverage does not cover hit and run collisions. I found that out the hard way. My comprehensive covers that, but not underinsured coverage. And this is a big deal. Why? Because in California, we have one of the highest rates of hit and run incidents in the entire United States. This is a very big deal, right? So it may make sense for you to consider that if you are looking at your auto insurance policy while we're talking about this in this lecture. So let's go through some examples so that we can kind of get used to this. Let's say that Norris has a automobile insurance policy and he has a deductible of $1,000. He damages his own car in an accident and it will cost $3,300 to repair. How much of that does Norris have to pay? $1,000 because that's his deductible. Therefore, how much does his insurance kick in? $2,300, the balance to repair the car. All right, that's one example. Here's another example. Alicia has a collision deductible of $500 and a bodily injury liability coverage limit of $50,000. She hits another driver and injures them severely. The case goes to trial and there is a verdict to compensate the injured person for 40 grand. How much does Alicia have to pay? She pays zero. Remember, liability doesn't have a deductible. How much does her insurance pay? Her insurance pays $40,000 because it has a limit. Her policy has a limit of 50. This is under the limit. They will pay the entire $40,000. Now, let's alter that a little bit. Let's say the same thing happens, but just before the accident, Alicia reduced her policy. The coverage for liability was $50,000, but in order to save some money, she lowered it down to a bare $25,000. That would mean Alicia has to come out of pocket for $15,000, and her insurance company is only going to cover what the limit of the coverage is, which is 25 grand. So you can sort of see here what's involved just from that last example, right? Many times we look at our auto insurance premiums and we say, man, that's really expensive. And many times it is very expensive, especially if you're a relatively young driver. Yeah, it can be very expensive. And you look for ways, we all look for ways to reduce what we have to pay in our monthly premium. But just realize there are occasions where the very thing we think will never happen, well, unfortunately, sometimes it happens. And you have to really take seriously, can I afford to have this insurance if I've lowered the premium limits or increased the deductible to the point where it may not be financially feasible for me when the very worst thing occurs, right? These are the kinds of things you need to consider when you think about different types of insurance, whether it's renter insurance, homeowners insurance, or here in this fourth video, the topic of auto insurance. So I hope that's helpful, right, as we consider these major forms of auto insurance that most of us have to carry to legally drive a car or own a home, right, these kinds of things, right? So hopefully that's helpful. We'll see you in the next video.